Good day, everyone. Welcome back to another weekly market outlook. This week, markets are still being driven by three major themes: geopolitical, inflation, and interest rate expectations. The biggest story remains the conflict in the Middle East, especially tensions around Iran and the Strait of Hormuz. That area is important because a huge amount of the world's oil passes through there. Every deadline about escalation or de-escalation is moving oil prices, and oil is then feeding into inflation, expectations, bond yields, and overall market sentiment. So the reason this matters so much is because higher oil prices can, keep inflation. If inflation stays high, central banks may not be able to cut rates as quickly as markets were hoping. So right now, traders are watching every geopolitical headline because it could change the outlook for inflation and interest rates. Bond yields are still a big part of the story as well. When the market thinks inflation could stay high for long, yields tend to move higher because traders push back expectations for rate cuts. But then when oil falls and tensions calm down, yields can ease and the markets start pricing in more room, for central banks to cut later in the year. Moving over to gold. Gold had a strong week overall. The main reason gold remains supported it is because there's still a lot of uncertainty in the markets. We have a war concerning questions around inflation, uncertainty over central banks, and at the same time the US dollar has softened slightly. All of that tends to support gold because investors move into your safer assets during these uncertain times. However, there is still a bearish factor for gold as well. If yields continue to move higher and markets believe rates will stay elevated for longer, that can put pressure on gold because gold does not pay interest. So gold is currently being pulled in two directions. Safe haven demand is bullish, but higher yields are bearish. Overall, as long as uncertainty stays high and the dollar remains weak, gold can continue to hold up well. But if the market starts believing rates will stay high for much longer, gold could struggle to keep pushing higher. Now let's talk about Bitcoin. We've seen some movement in crypto this week. Bitcoin has been moving mostly with broader risk sentiments. When equities are strong, traders are willing to take on more risk. Bitcoin tends to perform well, but when the market becomes defensive, Bitcoin usually comes under pressure quite quickly. So a lot of Bitcoin's recent move has been driven by institutional interest and ETF demands. More traditional financial firms are still getting involved in the crypto space, and that has helped support the market. But Bitcoin is still trading very much like a risk asset right now rather than a safe haven. That means if the market becomes worried about higher rates, stronger yields, or geopolitical risk, Bitcoin can sell off. But if inflation fears ease, and stocks continue higher, Bitcoin could continue, to recover alongside tech and other high risk assets. On the equity side, stocks have remained fairly resilient, even with everything happening globally. Equities have been holding up because of earning expectations are still strong, and investors believe companies can continue to perform well. So while the macro environment is still uncertain, the market has been supported by strong earnings and steady buying in risk assets. Oil is probably still the most important market to watch this week. If tensions in the Middle East calm down and oil starts falling, that would help inflation concerns ease and could support stocks, Bitcoin, and even gold through a weaker dollar. But if tensions escalate and oil spikes again, that could quickly bring inflation fears back into the market, push yields higher, and hurt overall risk sentiment. Looking ahead, traders will be watching economic data closely, especially PMI numbers and signs that higher energy prices are starting to slow down. It can slow down the growth. Earnings will also stay important because strong company results can continue supporting equities even while macro risk remains high. So overall, the main thing to watch this week is whether the market shifts back towards growth and earnings or whether geopolitical and oil continue to dominate. So I'd say watch oil, watch yields, watch the dollar, because those three things will likely tell us whether the markets stay risk on or move back to risk off mode. That being said, we're going to head over now to the charts. Let's go through what's happening in the news this week and what's happening on the charts. Let's show. That being said, let's head on over to the charts. First things first, we'll look at what news events are happening this coming week. So for Monday, we do have some news that is going to inflict on the Canadian dollar, and obviously for the New Zealand dollar as well. But other than that, for myself, I'm not really too worried about it. On Tuesday, we've got quite a big day, starting off with some GBP news. We also have some USD news. We've got the Fed chair designate Wash testifying, and then we also have retail sales and core retail sales. So that's going to be quite a big impacted news event. For Wednesday, we've only have the GBP news. Nothing too hectic there. On Thursday, we have the European and GBP coming out. But for the dollar, not really anything hectic. And then Friday, we also have GBP. So news-wise, it's a very good news if you're trading anything that has to do with the dollar. I think that there's still, with everything going on, there's still going to be quite a bit of volatility coming in. So that's not really something to worry about. But the red folder news-wise, you're pretty much good to trade most of the week. That being said, let's look at the dollar. So obviously, this was when the notification of the ceasefire came out. The dollar absolutely crushed. We had this gap here. Once again, we can see price has continued on its way. Sort of had this double top here where price broke above and then dropped. We were then looking at bearish structure, and that's when the ceasefire notification came out and price just dropped. We are still following that structure, but we have seemed to hit a little bit of a support level, which is very good to see. This week our eyes are definitely watching dollar quite in depth, just making sure what's happening with the dollar, as it obviously affects gold, affects Euro USD or whatever you are trading, it can affect. Looking at oil, we can see that oil in past runs, so when this war sort of came into play, it affected the Strait of Hormuz, which is one of the biggest oil, where the most amount of oil comes through. So naturally being said, the oil would be affected. That was this run here, and then we've sort of been ranging, and we have now been stuck in this range a bit. So this week we'll see if price recovers, sort of comes back up. If we break out, we could see oil start to drop. But with that being said, if the Strait of Hormuz stays closed, oil should still be going up. But obviously time will tell. We do not speculate. We merely just go on what the market is showing us, and we go with the trend. So oil this week is going to be a good one. As we know, oil isn't at all-time highs, but every single time we've come close to it, it sort of just fails to break through, which has been an ongoing occurrence. As you can see, this is the all-time highs. We came close, took out all this liquidity here, and didn't break through. And then price came up close, still didn't break. So interesting times ahead for oil. Let's go back onto the 4-hour. For gold, this week on gold, I actually took a nice sold position live in the YouTube. So definitely do join in for those. We do a giveaway, and then we also do some live trading and on questions and all that. We took this sell here, so once price was quite bullish, we tapped into an area of interest of mine, and then we caught a nice sell position here. Gold, we could potentially see price still continue on its way, but I would think that we could see this range being in play this week. If we do break out of this range, then I potentially see us starting to continue on our way up. For NASDAQ, I mean, stocks this week has been absolutely ripping. Every single person's stock portfolio is looking great. I do believe that this is more short term. I don't think it will be long term. But as I say, it's always speculative. I'm not, it's not financial advice. But I do think this is more on the shorter time frame, especially for the crypto markets, which we'll go over now. But yeah, US 100s looking really good. We can see that on S&P 500. We also had all-time highs. So yeah, stock market is looking really bullish at the moment. Looking at GBP USD with the dollar sort of fluctuating as much as it has been. GBP USD has been showing signs of it being bullish, and then all of a sudden flipping bearish when the dollar starts to strengthen. So tough times ahead on that. Same thing for Euro USD, as it also correlates. Looking into the stocks, so we've got our alternate coins that started to show signs of pushing, especially Friday when Bitcoin started to move up to the upside. We saw price sort of on all the altcoins go as well. But we could potentially see that as a corrective now. And yeah, so all the altcoins are all pretty much looking the same. Bitcoin here, we saw price start to move in really nice market structure. So we've got the pushes, pullbacks, and yeah, not really breaking any market momentum or anything. But we've now come into an area of resistance. As we can see, last time price tapped this area, we ripped. So let's see how it holds now in this area. If it does continue, then we could potentially see the altcoins start to continue as well. As we know, it's like a domino effect. So Bitcoin usually is on top and will go first, and then the others follow. But yeah, that being said, everyone, hope you have a great week. Join in for our Trade of the Week in our Discord. And yeah, check out our website. We've got all our new prices. And yeah, don't miss out. Cheers, everyone. Have a good one. I'll see you in the next one.